presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. January 23rd, 2023. Love is responsible for its actions. Everything you think, everything you do has a consequence, and you are going to experience the consequences of your actions in one way or another. All human beings are completely responsible for their actions, even if they don't want to be. Market-wise, let's take a look at it out here. We have the Dow Industrials right now up 218, Nasdaq up 152, S&P's up 40. Gold contract up $5, traded at $19.44 an ounce. We have silver up 8 cents, $23.81 an ounce. Light sweet crude up $1.10. $79 flat, notes and bonds. A 10-year note up 8 ticks, trading 114.17. The 30-year up 5 at 129.30. And King Dollar. King Dollar down, oops, where actually? Let me get this thing. Excuse me, King Dollar down 193 ticks, trading 102.083. Euro 108, yen at 130, and the British pound at 123 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's go to the futures first, because this is a market that is crawling higher with light volume right now. So if we end up like this, what's going to happen is that you're going to have a down day tomorrow. So if we take a look at the futures, let's see what we just did here. So from 2 days ago to now, we just did a 61.8% retracement. That being said, now let's get closer in. Okay, so we're going for the highs of yesterday. That number there is 4078, where we've hit 4074. And this bar here, you're 9 minutes. You're going to make another bar. Yeah, we're gonna go for that bar. That bar is game. Well, it's only 5 points away. We'll see how this bar comes in, but that thing is game. If we go to the SPY, we take a look at the SPY. What you're gonna see is the bottom line is that what we did out here yesterday. Bottom line, you came down with light volume, right? You did 74 million. You were going into 84. And now today, this is where the killer is, man. You're only up with 39 million. We do 40 million or something. The 40 million's going to 68. That's a building cause might take to get to lower price. You know, because we still see the bottom of the consolidation still has volume. The bottom of this consolidation on the SPY at 100 million has volume at 374.77. We go into the NDX 100. We look at the NDX 100. Same type of setup inside the NDX 100. Well, we'll see whether we get the volume. I mean, the NDX grabbed a bunch of volume at the close yesterday. Right now, you're at 33 million. We were down yesterday with 49. You were going into 52. We're going up on 33. I mean, if this other thing only does 43 and we're going into 56, your probability goes much higher that you're going to go right back down, because we have not tested the low of October 13th, and that's a high volume low. That has 112 million shares. So there's some real action out here. Gold contract out here, rejected lower price today at the 1915 area. That being said, bottom line is that this is not, you could look at this and say, okay, we got a hammer here, but this is not a hammer. This is a hanging man. The difference is, folks, is hammers show up at bottoms of trends, hanging mans show up at top of trends. So, we get down there, made a huge comeback. There's no doubt about that. You take a look at this intraday, what you're going to see, this comeback was fast and furious. And just the correlation. So picture this. It started at 7 o'clock this morning, coming back, because it hit the low at 7 this morning, that 1915. Now watch the dollar. Watch this. This is like amazing, actually. So we put the dollar up, and you're going to see, I put it intraday, and here you go. Same time frame, 0700 this morning. That's how it shook out. The dollar comes down. Let's put this back here and see where we are from the low of yesterday to the high of today. You did a 0.618 retracement. So it's going to be all about the Fed tomorrow, Ben. It's going to be about the statement, what's in the statement, and how long they're going to go not only out there. Well, I think it's going to be 25 basis. Well, a 0.25% hike. 0.25% hike this time, 0.25% hike next time. We see where this thing shakes out. Some of the higher volume equities out here, and we're going to have a low volume day. Tesla is up $6. You got Ford's moving. Interesting. Ford's up 56 cents. Nvidia's up 270. You get General Motors up 280. Get the car companies moving out here. Rivian's up $1.16. Facebook's up $1.80. Micron's down $1.80. And you got Google up $1.40. We go take a look inside the NDX 100, strength versus the weakness. You got Rivian 6%, 6.5%, CrowdStrike 3.5%, Tesla 3.7%. Taken away from it. Moderna is down 3.5%. You get Micron off 3%. We get Sirius Satellite off 2%, and Lucent's down 1%. Inside the Dow Industrial, strength versus the weakness inside the Dow. The movers out here go like this. Point-wise, United Health's putting 69 positive points, Home Depot 50, Goldman 36. Taken away from it. Caterpillar's the big one, minus 67, Big Mac minus 27. The human error inside the New York Stock Exchange, folks, there's people going to lose so much money, it's unbelievable. So this is how this is going to shake out. So the New York Stock Exchange per month puts like $500,000 into a fund in order for these particular things. What's going on here, though, is that they figure that, first off, so this is what it says. It says, investors hurt with the New York Stock Exchange malfunction sparked wild swing prices are trying to recoup their losses. Bottom line, losses incurred in the New York Stock Exchange glyphosate could amount to millions of dollars, and claims of thousands, and thousands of claims have been submitted by Charles Schwab, Robinhood, Virto, Citadel, and this is where it comes into it. Those claims were submitted at the Friday deadline on NYSE rooms, likely to exceed $500,000 that the exchange operator set aside to cover disruptions each month, the people said, adding, the likely losers from the glitch are individual investors who stand to recoup a fraction of their losses. Yeah, there's got to be bigger penalties for New York Stock Exchange, man. Human error and trillions of dollars. Bottom line is that, they make plenty of money, man. Time to come up with that bread. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up 179, Nasdaq's up 121, S&Ps are up 32. Let's go to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. And don't forget, folks, Basil does an outstanding show here every trading day, 10 to 11 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, it's very easy to get Basil's newsletter, folks. Come over to our website at TFNN. You're going to go into newsletters. You're going to see it right on the right-hand side, the second one down. You can get Basil's newsletter for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. And you can get it for 1 year for $1195, which is a savings of $593 or 33%. Now, they all come, folks, with a 30-day money-back guarantee. So you can come out here, you can get the letter. If the letter works for you, great, you keep it. If for some reason it doesn't work for you, you get your money back. What you also get is Basil has approximately 12 amazing archives out there. So you're going to get an education and a half for the month that you have this letter. And you got lots of work ahead of you. Basil Chapman, what's going on?
Hi, Tom. How are you? End of the month.
End of the month again. Again. I mean,
that was quick.
Wait,
Yeah.
Listen, March 17th is only, 45 days away. Amazing.
So, yeah.
I know.
So this is very interesting. I got a little bit of a sell-off here. Actually, I just sent the Den a note to say that in my shorter-term charts, we made a peak F in the 1 minute chart and a peak F in the 10-minute chart. So we'll see how I mentioned the 4,064 level in the E-mini is really key support, and that's about where we are. So it's very interesting because this market's kind of formulating. There are patterns that it's repeating over and over. And I'll just show this to those of you who are new to my work. I like to identify the lowest bar and see if we can get a starting position and count each successively higher peak. At the fourth highest peak, I alphabetize in peak A. The next higher peak is B, and the next is C, and the next is D. You can go all the way to E, F, and G. But D is where other things can happen. So the objective is to get you from a buy signal to a buy mode, and that implies it goes to at least a D. So here we are. We went to a D at 34,342 in the Dow. Then we had that Goldman Sachs and Travelers really, it just hammered the Dow Industrials. So they fell very sharply. They've come back some. They're holding okay. But what's really interesting is that if you look at the weekly chart, finally we are out of the inside, call this the inside track repellent zone. It's now propellant zone. but basically it's going sideways. So it's like a consolidation, and you can see that in the S&P. I'll show the same thing here. The S&P has gone to a leg F. It could be an alternate count, but at least it went from a low bar to peak A, then B, C, D. It's gone E, and then it's stalled at F. So this is very good action, but you can see this 200-period moving average in the daily chart is really it's like a magnet, and until the price really pushes sharply away from there, this is going to act like a magnet. So that means that 30,095 is kind of an area that you can expect will be touched over the next couple of days, even if it bounces a little further. And finally, we're out of the inside track repellent zone in the weekly chart. So that's a positive, but it's still, in a way, it's good, but it's still struggling. The QQQ is exactly the same thing. That has gone to a peak F right at the 200-period moving average. So you can see when I show you the different charts that a lot of the work has been done. It's been a fantastic move from the low of December to this very quick move up in January. Now I think there might be a stalling, and I'm trying to put it together with the Fed. And I always like to go back to, and I need to check this out, but I think it was General Foods that was in the Dow once upon a time. There were three generals: General Foods, General Electric, and General Motors. And none of them are in the Dow anymore. But I remember that there was a period that I got a sell signal, and the Dow looked very weak, but there was this one stock that kept holding the market up because it was a takeover rumor, and it had enough momentum to at least counteract a very sharp move down. I'm thinking here that the Fed, at this particular point, this could really be perfect for the Fed, because what they keep doing is that the market moves up off a low, and it goes up substantially enough for them to maybe even talk about whatever they want to if it's negative, because they've built a base. So you're off the low, and if there is a pullback, it's a pullback that you can understand it because you've already had a decent rally. So it gives the Fed an opportunity to really say what they think and what they want to do. But of course, we know that when you're looking at the Fed, they look historically. They aren't allowed to project out. They have to look at the data that's in front of them, and all the data is by nature historic. It's a look back. So they're always behind. So I think that this gives them an opportunity. Whatever happens tomorrow, I think what we're looking at is there's enough resistance just on the shorter term to say it's going to take a really strong move to the upside to break away from these levels. But so far, the buy modes that I've been looking at in all these different indices, certainly on the daily charts, are intact. So I think it gives the Fed a little bit of room. They've got a cover now. You've got a bit of a rally. So if they had to say something negative, I think the market can handle it in the shorter term.
So Basil, listen to this. You're going to love this. General Foods was acquired by the Philip Morris companies in 1985. And listen to this. This is crazy. In 1989, Philip Morris merged General Foods with Kraft Foods, which it had acquired in 1987, to form Kraft General Foods. The cereal brands of Nabisco were acquired in 1993, and then in 1995, Kraft General Foods was reorganized and renamed Kraft.
But aren't they Kraft Heinz now? Didn't they?
Yeah, that's right. They are.
So, and I remember I was talking about this the other day, and I said, unlike Larry Pesavento, who remembers the exact minute 30 or 40 years ago that he was with so-and-so, and he remembers the name of the person, I was freaking. I said, it must have been 1983 or 84, if I'm correct about it. Yeah, thank you very much for that information.
Pretty wild,
but,
man.
Isn't that interesting? And that's interesting because that, in many ways, we're looking at the stocks that are really historic stocks. These are, every one of the names that you mentioned are names that have been around for a long, long time.
Exactly.
And they're still in the market, and they're still very important segments of the market. Very interesting.
Let's just look at Kraft. Watch this. So this is going to be crazy when you actually look at it. So the revenue of Kraft Heinz now, look at this. The revenue of Kraft Heinz is $26.3 billion. And when they first started it off, that was a monster number, buying it at $5.6 billion. Is that well? I mean, there's more mergers, but that's pretty intense, right?
That is really, that's fascinating.
It is.
So, and what's very interesting in that whole aspect is that I know people dismiss the Dow. I've used the Dow ever since I began looking at the market decades and decades ago. So I give a daily call on the Dow for my subscribers every day. But what's really interesting is that the Dow kind of does whatever the market does. And sometimes it's a leader, sometimes it's not. But basically, if everything is going up, they're all going up together. But what we have noticed is that semiconductors, for the very first time, have had a very good move up. But then when you listen to the news, you don't know what's going on in the semiconductor. And that, that's chips. That's like the oil of the 1900s and the 2000s. Oil, chips are like oil.
Yeah, that whole deal, thinking that it's not a commodity, is crazy, because it is a commodity.
Absolutely
They always bid too much, and then they blow it up again. Yeah.
Absolutely.
Listen, folks, come over to our website at TFNN. Go to newsletters. Go to the opening call. Basil, have a great one, safe one. Thank you.
Thank you, Tom. You too.
Stay right there, folks. Come right back.
Time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 170, Nasdaq up 117, S&Ps are up 30. Let's go take a look at, there we go, FIGS for a couple of the tigers out here. So you got FIGS. They provide health care, apparel, lifestyle. This is the scrubs and all this. It's amazing when you look at this. Wait to see this, folks. So low of the year, last 12 months is 555. The high is 2394. The revenue on this thing is $469 million. It is a big, big number. And, just people buy. I mean, the reality is that people And hospitals, I mean, healthcare is a monster deal. So what do we have? Well, what you have here is one of the Tigers already owned. He moved a couple shares out. Yeah, you have an ABC up here, and it's just finished. That's what this is. So, bottom line, you finished. You took it out. Now, I suspect what you're going to see. Let me back this down a little. Okay, so 879. This is good. So watch something here. This is pretty cool. So what happens is that you're going to want this to close over 879 at the end of this week. That's the way this thing shakes out. See, I got this on a weekly. You're not going to get the volume on the weekly. But the reason you want it to close over it is this. When you see big downdrafts like this, like I got this back to 2021, it was at $50. And you can see as you stare down, right, every time that you actually did a bounce, you never took the prior swing point out. This would be the first time that happened. That's important because what does happen is that as you take a swing out, that is saying, okay, now we have more buyers. And what I've learned is this, is that on these dead cat bounces, okay, because the cool thing here, so watch this. This is what I love about something like this. If I just do a dead cat bounce on this, a dead cat bounce gets you to 22 because the thing's been down so dramatically. Let me pull this back for another bit. Yeah, so that's what it is. A dead cat bounce gets you to 22. My take on this is that I'd stay right where you are. You already made some bread on those shares. Let it go sideways for a bit because your next deal is going to be this $9.95. I'm taking the bottom. See this right here? Watch this. It's going to line up the same place. It's so weird, man, how these things can do it. It's not weird. It's a mystery to be lived, not a problem to be solved, folks. So you can see the big volume on the way down here? That's 923. It went to 975. See, this is giving it flack. Then the next one right there is 977. I suspect we had to see this is what it did. Went to 975. That stopped in its tracks right there. The good news is that you're going to be over this level. It'll lead some more sideways movement. Then I suspect what it's going to do, it's going to go after the next swing point. That's how they normally shake out. That's how this thing normally shakes out, man. So chat GBT, folks. So check this out. This is awesome. This is going to be a whole trip. They just released they're going to release a new tool. And what the new tool is, now it's definitely not accurate. They're telling, well, we'll see when they release it. OpenAI just released, which just released the chat GBT. They are going to release a tool that will flag content written by OpenAI products as well as other AI software. The problem is right now it's not too, it's definitely not something that you're going to bet on because they just did tests on it, and what ended up happening is that 26% of the AI written text was correctly identified. 1 out of 4. But what it also did, it flagged a 9% of actually humans that actually did write it, saying that they were was an AI. So I suspect what that is that are some very bright people that are phenomenal in English. And let's go to Mark in Fort Collins. Mark, what's going on, brother?
Hey, Tom, long time no speak. How you doing?
I'm doing great, man. How you been?
Been good.
Good.
Yeah. Hey, natural gas has been taking a nosedive, and I watched the UNG, but I don't get the natural gas contract or volumes or anything like that. I was wondering what your thoughts are on that.
So let's take a look at it. The way that I look at this, Mark, okay, I wouldn't be trading this period. And I'll tell you why, right? So let's bring this up here for a second, because I've explained this many times on the air, folks, and I've used to trade natural gas so much it was insane. So what you have here, you can see, if I just go back to what? December 13th, natural gas was at 612, right? Now you're at 272, right?
Yeah.
Now watch this. NG1. I take this and we'll put this on a generic contract, meaning that we continue them together, right? And natural gas we'll do this first, Mark, then I'm going to go back to the contracts and put the volumes on it for you. You can see this contract was in a one-way route from $18, now we're to, well, the bottom of this range is $1.40. So now we'll go back to the contract, and then we're going to talk a little bit about, so then we put the contract up. And I get the volumes up. Okay, so you can see, I mean, you're not only down there, but you get volume. Now, we go to the UNG. So, yeah, well, first off, and I believe you know this, Mark, right? So this contract, folks, that we trade, okay, this contract is at the New York Merc, and it trades off of the hub in Louisiana, okay?
Yeah.
This has nothing to do with Oklahoma, or it has nothing to do with the price of gas on the West Coast. Well, the problem, Mark, is that these terminals are full. And they're not only full, there's gas that's getting flared because there's nowhere to put it. So I don't even understand why people are trading this.
Yeah.
You know, so technically it wants to go there, but fundamentally you can find this out very easy. I mean, they're full. So it's like, okay.
Yeah, but what's been crazy is people's gas bills around here have been like skyrocketing. It's crazy. Like it's double from last year. So it's interesting to watch and see.
Well, that totally makes sense though, because you are not buying this gas that is trading here.
Right.
That what happens is this: there's a terminal out in Oklahoma. There's another terminal that's in California, and they're getting big money because both of those terminals, okay, are out the West Coast, but both of those terminals are always going liquefied natural gas going over to Europe also.
Yeah.
So, I mean, I wouldn't touch it, man. I mean, I watch everyone like every day talking about it, and I don't even get it, man. I don't understand it because, you know, it's like, okay, you're trading something that is full. It's like, really?
Yeah, no, I haven't really ever traded it. I just was curious because I was watching it, and I was watching the boil, which is crazy to watch that thing trade off natural gas, and it's always intriguing, but I haven't dipped my toe in, and I was just curious.
It is, and listen, you know, the other side of it, you know, there's action in it. There is action, so maybe that's why people like to trade it, you know. But it's still in a downtrend, and, you know, after I read this article, what happened is this. I read this article like 2 months ago, right? And I'm saying to myself, you got to be kidding me, man. You know, that the bottom line is that, yeah, they're, you know, the wellhead here is full. And, you know, there's so much oil that's being pumped, you know, bottom line in Louisiana, that the gas, they just flare off, man. You know?
Yeah.
So. Cooking,
right,
brother. Have a great one. Stay right there, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Dow Industrials up 233, Nasdaq's up 134, S&Ps are up 39. And next company laying off, folks, is PayPal. PayPal's going to cut 2,000 staffers. Let's see, the cuts will affect 7% of the staff. They got a couple weeks. These things are adding up. They're not monster numbers, but, you know, if you're in the middle of that, then you've got a depression on your hands, because that's a big number when you're in the middle of it, no doubt about it. What's going to be interesting here is that we're just, Musk has that trial going on with Twitter. So, let's see. Investors lost $12 billion over 12 days as a result of Musk's famous tweet in 2018. Now, this is going to be from Musk's lawyer, I'm sure. No, not Musk's lawyer, the liability lawyer. That he had secured to take the company private. A witness testified at trial. Yeah, they're all going to have expert witnesses, right? Lawyers for Musk have said there are billions of dollars in damage. Lawyers for Musk have said there are billions of dollars in damages at stake in the trial. Now it's third week. But until Tuesday, the exact figure have been subject to speculation. The trial revolves around Musk's controversial August 2018 tweet that he was considered taking the electric car maker private. Investors have called numerous witnesses, including the top Goldman Sachs executive, to make their case that the tweets triggered a dramatic fluctuation in Tesla's price, causing trading losses, and the damage is delineated at trial Tuesday. The loss figure was presented to the jury by Michael Harsmack, an expert witness from Forensic Economics, who testified how he measured the impact of Musk's tweets on the price of Tesla securities. You know, it's so hard to really understand here, right? The tweets caused losses to investors over a 10-day period, he said. He walked the jury through how Tesla shares spiked in response to the initial announcement from Musk, then declined sharply as doubts grew about the take-private plan. I can't figure out. I'd love to know how they figure that out, because I think they're going to have a hard time really. Well, let's see. I want to see this Tesla. Bring it up. Let's see exactly what they're talking about. So this, well, let's see. I get the time frame. So when was this? Now this was. So the time frame. Okay, August 2018. Okay, cool. So let's do this. I'll do 2018. I'm going to make that, let's see, August it was. So let's make that 06. And then we're going to make this 2018. and we'll make this, let's see, we'll make it till the 10th. Yeah. Okay, so what we're going to bring up right now, I got to see this. Okay, so I see what they're saying. Interesting. Okay, so where's August 18th first? Okay, so that's September 17th. Okay, so here it is right here. Oh, it just says August. Okay, so in August, yeah, I see what they're saying, man. Okay, so you went from, now this is already split. They're talking about a 420, so this must be, it was $25 on the beginning of June, the beginning of August. $25, and then, yeah, at the end of August, it went to 16. That's a lot of money. I see what's happening here. Wow. And then it went to the moon, right? I guess that doesn't matter, because what matters is that what happened in between it. Because what happened there, folks, when we were just looking at that chart, what happened was the aspect of that the market recognized that he didn't have the money to do this at that particular point, and then bottom line, you know, so it's going to be so intriguing to see what the number is going to be, you know, because, and does he have insurance for that, or does Musk have to come up with some of that? So we'll see how this baby shakes out. We take a look at Home Depot. You know, Home Depot's up today. It's up $8.32. And what is this up on? This is up on, they're just buying it. Yeah, because the numbers, this is coming out the 21st of February. This is a dead cat bounce, man. They're going to be looking at taking $36.1 billion and bring $3.94 to the bottom line. We got to go over, take a look at a couple of these builders. Toll Brothers was moving out today, so look at this. Toll Brothers is coming out the 22nd. We've talked about, you know, these builders before. So if we take a look at Toll Brothers, you get volume behind this move out here today too. Let me pull this on a weekly. It's pretty impressive that, you know, the way this is basically, you come down off the high at 75, but you played in 59. But you're going, this is the dead cat bounce. Well, it's bigger than a dead cat bounce, because I believe we already did a 50%. Yeah, we already done over a 50% retracement of the move. So that means it's going to do a 61% retracement. And that's going to be, what is that, $61? $61.50 is a 61% retracement. So there's no reason it can't do it. Yeah, it's, you know, if you had, it's hard. Yeah, let me pull this up, because, you know, we always know that, you know, you have the black swan funds, folks, and so what the black swan funds are about is they put on future positions and options on future positions for that black swan that comes in once every, seems like they're coming in actually once every, you know, even 10, 15 years now. But there's an article today on Bloomberg. It's worth reading, you know. And what it says, Black Swan's Taleb, it's Nassim Taleb, warns Disneyland is over for investors. Now, there's a lot of stuff in that article that, here's a quote, Disneyland is over. The children go back to school. The author of The Black Swan said, it's not going to be as smooth as it was for the last 15 years. So when you read this, right, there's a lot that he has in there that common sense wise would be like, okay, yes, you know, it would seem that this is real and it could happen, right? And what he says here, Taleb described a generation of investors who over 15 years forgot the importance of cash flow as financial crisis unleashed a wave of easy money. I don't believe that investors have actually forgot about cash flow. What happens is that, yes, when there's like anything else, the markets go up and down, and the markets sometimes are tougher to trade and easier to trade. And there's no doubt when there's, you know, money that is low interest rate structure, well, yeah, it's the buy the dip, buy the dip. But the aspect that people don't understand cash flow, that's what he's saying, I don't believe that for a second. I think all of us understand cash flow. And, maybe, some of the, 17 and 18-year-olds that are trading the meme stocks, but, they're going to learn fast enough. Stay right there, folks. We'll come right back.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Run, Forrest, run! Run, Forrest, run! Here we go. Dow up 308, NASDAQ up 148, S&P's up 49. Check it out, man. You got the SPY, folks. It's closing the gap since the gap down on 2 days ago. Let me put this up at a 10 minute. You got to see, this is pretty cool. There it is. So the gap is 405.55. We're at 405.74. You're still going to be up with light volume. That's saying you're still going to back down. It's going to be a trip watching this whole thing shake out. You have 57 million shares. You're coming against 68. Hey, we'll see. Maybe they'll put 10 million in the close. They could. They've put quite a bit. We started out at 34, but 57 right now, so it's a lot. NDX 100, we take a look at the NDX. NDX right now, 39, that's not enough. 39, you're going into 56. And let me just see if that's doing the same thing. No, it hasn't made it. So the gap on the Qs, there's 296.11. We hit 294.25. Yeah, so this is going to be intriguing. Watch it shake out. The volume in the indices and the NYSE right now, you're 540, so that should do 850. And we take a composite. We look at the composite. The composite is at 470, 4.7 billion. That's going to be a contraction. It's going to be, you're going into the composite's going into, yeah, forget it, 6.2. You're going into 6.2 right now. You're at 4.7. I suspect that'll come out about 5.5, 5.6. But the bottom line is that you are going to close at the highs of the day. That's how this thing is shaking out right now. And where's that dollar right now? Where that dollar must have went lower. Because when the market, well, it hasn't. 2.8 down, 2.18. It was up. Maybe, let me look at this. It's amazing. The tight correlation between this dollar and the market is pretty amazing. Yeah, it really didn't. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, a safe night. Come back and visit Tommy tomorrow morning. Kicks us off 9 a.m. Great show, folks. Look at him, folks.